The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Lots of volatility in the past hour and a lot of volatility over the past 48 hours. So joining us now to discuss the markets is Chris Matta. He's president at Canadian crypto asset manager 3iQ Digital Assets. Welcome, Chris.
Thanks for having me again, Lawrence. Appreciate it.
Thank you. Of course, the market has gone through some serious mood swings over the past day or so. It was sad and of course, very nervous about what's going on in Ukraine and Russia. Then it became elated over the president's recent executive order, and now it's back down to more somber ideas with a little punctuation during the CPI
order
number that came out.
Yeah.
So what's going on here? I mean, has it found its footing yet?
Yeah, so I think what we've seen lately is a lot of times when there's these big moves or big headlines, Bitcoin moves alongside other risk assets in the early days before you start to see that real decoupling as these headlines shake out. So what we've seen on the macro side, like you mentioned, the Ukraine-Russia crisis, I think there's positives to look at there from a Bitcoin standpoint with obviously the use case you just talked about, the ability to donate money and raise money for Ukraine from anywhere in the world is something that's really, really powerful that Bitcoin has enabled. But when you look at the broader backdrop around, Russian citizens that can't necessarily access their bank accounts, Ukraine needing funding immediately, you look at the inflation numbers, which you talked about earlier, 7.9%, and that's really before the commodity price spikes that we saw at the beginning of this month. So we can expect that the inflation numbers next month are going to even be higher. When you look at economic activity here in the U.S., which is slowing down, that's a tough combination, right? When you see economic activity slowing down in addition to really high inflation, that's going to put a lot of pressure on equities. And then on the fixed income side, the last time we saw inflation rates at this level was in the 1980s. And at the time, yields were double digits, right? So now when we look at real returns, inflation-adjusted returns, they're way negative, right? So there's potential to see sideways movement, potentially even further downward movement in equities and fixed income prices. And I think when you look at this holistically from a macro standpoint, and then you layer on the executive order that came out yesterday, which I think from a lot of institutional perspectives is a legitimizing event. Whether or not it's going to be positive or negative for the space, I think we can debate all day, and you're going to have 20 different opinions on that. But the highest level of government in the U.S. is acknowledging this space, and that is legitimizing, right? So when you look at this holistically, the macro environment, the regulatory updates, I think it legitimizes the space and is showing a maturity in the crypto asset class that institutions really can't ignore.
Chris, it wasn't that long ago that the crypto industry was really excited about DeFi. Obviously, that's been overtaken by some arguably more important events in the world. But what's going on with DeFi right now? Are you looking at those markets and anything interesting happening there?
Yeah, look, we do absolutely look at DeFi. I think that's really where the cutting edge innovation is happening. But for 3iQ, we really focus on how to bridge the gap between traditional finance and the crypto ecosystem. And I think DeFi is really fascinating. There's a ton of funds out there that are deep into DeFi and trying to push really innovative, yield harvesting products. From our standpoint, we do look at it. We just recently launched a yield product. It's not focused on DeFi just yet. It's more focused on CeFi. But as you guys know, the yields in the crypto space are really attractive because US dollars are hard to come by. Traditional banks don't necessarily lend into the crypto space today, right? So being able to make it more accessible for traditional financial participants to access the elevated yields in the crypto space is something that we're really focused on. And I think institutional investors now, as we're talking to more institutions, they're starting, like I said, they can't really ignore the asset class anymore. They're seeing these macro indicators. They're hearing the buzzwords like DeFi. They're seeing yields that are really elevated. There's so many different opportunities. They're not necessarily diving yet into owning Bitcoin. That's very difficult for them to do. They're built to be very slow moving. Their investment committees, their risk policies are such that it's hard for them to just purchase a brand new asset in their portfolios. But what they are doing, you've seen a huge pickup in venture activity. Last year, there was over $30 billion in venture activity in the crypto space. And early this year, there's already been, I think, about $10 billion through the end of February of venture activity in the crypto space. And that's a good entry point for a lot of these institutions. Yield is another one. Maybe not DeFi yield yet, but like I mentioned, CeFi yields, which are 8% plus on US dollars in certain instances, are really attractive. So that momentum is really picking up. Institutions are circling and educating themselves on Bitcoin, but we've already seen them take action on the venture and yield side.
And so from the 3iQ perspective, what is the strategy navigating through this volatility? Is risk off the table, or is it time for accumulation?
No, look, I think for us, our thesis is really long-term, and it's supporting this entire ecosystem. So when we talked before about what that macro backdrop looks like, I think it's super positive for Bitcoin. I think traditional assets are potentially going to struggle. Inflation is going to continue to be elevated, and we're going to continue to see more and more interest from a variety of institutional investors. I started my career at Goldman, and we just saw, I saw a headline this morning that Goldman is exploring OTC options for the crypto space.
Actually, Goldman Sachs just announced that they're exiting Russia as one of the banks. So just
interesting.
Putting it in there.
Yeah.
Yeah, well, look, Goldman and many of the other banks have, they've obviously taken a stance on Russia. They're getting more involved in the crypto space. We've seen them starting to trade exchange-traded products internationally, crypto exchange-traded products in Europe and Canada and other jurisdictions. They've added crypto investment vehicles to their private bank platforms. They're looking to explore custody and trading and other solutions. And so that momentum is really picking up. It's not just Goldman, it's Morgan Stanley, it's Citi, it's Stifel, it's JP Morgan. We've seen such a huge movement over the past year. And I think that the macro picture is shaping up that we'll continue to see a lot of participation from institutions over the next 6, 12, 18 months.